The market is on track for its worst month since March of 2020. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all lower today on the last trading day of April. And although April is historically considered the best month for stocks, 2022 was far from it. Today's drop is being led by the tech sector, following a series of disappointing earnings and forecasts from major names. Amazon leading that decline today, with shares plunging more than 12% after a weaker than expected first quarter and disappointing guidance for the future. The online retail giant reported a loss of $7.56 per share. Now, that was not comparable to analyst expectations, as it did include a $7.6 billion loss from Amazon's investment in electric truck maker Rivian. Amazon's revenue, though, did rise 7% year over year to $116.4 billion. That was in line with analyst expectations, but marked the slowest growth in 20 years. Amazon forecast Q2 revenue between $116 billion to $121 billion. Wall Street was expecting that guidance to come in at over $125 billion. And Apple shares are also falling slightly today after topping fiscal Q2 expectations, but warning of supply chain issues. The tech giant reported earnings of $1.52 per share on $97.28 billion in revenue. Now, that was better than analyst expectations on both the top and bottom line, and the stock did initially pop after hours yesterday. iPhone revenue rose 5.5% annually to $50.57 billion. Apple did not provide any Q2 guidance, and the board of directors did authorize $90 billion in share buybacks, while the company also raised its cash dividend by 5% to 23 cents per share. But CEO Tim Cook said on the earnings call that Apple is not immune to supply chain challenges. Executives are expecting those issues to dent sales this year by $4 billion to $8 billion. And that outlook is what's dragging on the stock today. Intel shares also dropping today more than 6% in the session on a weak forecast as well. The chipmaker reporting adjusted Q1 earnings of 87 cents per share on $18.35 billion in revenue. That topped analyst expectations on both the top and bottom line. Sales at Intel's client computing division, which includes its PC chips, fell 13% to $9.29 billion, while data center revenue rose 2% to $6 billion. Both of those metrics, though, were weaker than analyst expectations. Intel forecast adjusted Q2 earnings of 70 cents per share on $18 billion in revenue. That missed analyst estimates for both as well. Now, Roku shares are popping today 7% higher after the company did report strong user growth in the first quarter. The digital media company did report a loss of 19 cents per share on $734 million in revenue. That was in line with analyst expectations, but revenue beat expectations. Roku said it added 1.1 million active accounts last quarter, bringing the total to 61.3 million. That was just shy of analyst expectations. The company forecast Q2 revenue will come in at $805 million versus expectations for $816 million. Now, Robinhood shares are flat today as the stock trading platform continues to struggle. As you can see, we had a big dip at the open, but things have since recovered a bit. Robinhood reporting a loss of 45 cents per share on $299 million in revenue last quarter. That was worse than analyst expectations on both the top and bottom line. But Robinhood's monthly active users did fall for the second straight quarter, dropping to 15.9 million in Q1 versus 17.3 million in Q4. Average revenue per user also tumbled to $53 versus $137 a year ago. CEO Vlad Tenev announced earlier this week that Robinhood is firing 9% of its full-time employees to eliminate duplicate roles and save on cost. The stock is trading far below its IPO price of $38 per share. Now, Exxon Mobil shares are down today after missing Q1 expectations. The oil company reporting adjusted earnings of $2.07 per share on $90.5 billion in revenue. That missed analyst earnings expectations, as the quarter did include a $3.4 billion charge related to its operations in Russia. But Exxon's revenue came in higher than expected as oil prices surged during the first quarter. Chevron shares also falling today, down more than 2%, despite profits more than quadrupling in Q1. The oil giant reporting earnings of $3.23 per share on $54.37 billion in revenue. Now that's $6.3 billion in profit was more than quadruple the $1.37 billion they had a year ago, as again oil prices surged. But the EPS was shy of analyst expectations and revenue came in higher. Now, taking a look at the economic data of the day today, inflation was running red hot yet again in March. The Bureau of Labor Statistics Personal Consumption Expenditures, or PCE, price index surged 6.6% year over year last month. Now, that's the fastest pace of inflation since January of 1982. On a monthly basis, headline prices jumped 0.9%. But economists are hoping this data is a sign that inflation may have peaked as core pressures cooled. The core PCE price index, which excludes food, energy, and trade services, and is the Fed's favorite measure of inflation, rose 0.3% monthly and 5.2% annually. That was a slowdown from 5.3% in February. And although wage inflation is soaring, it's still sharply lagging behind prices. The Bureau of Labor Statistics Employment Cost Index jumped to 1.4% in the first quarter. That was higher than expectations for just a 1.1% gain, and the index was up 4.5% year over year. Now that jump came as wages and salaries rose 4.7% annually. Benefits were up 4.1%. But with the CPI sitting at 8.5% and the PCE inflation at 6.6%, U.S. workers are still losing their purchasing power even as they're being paid more. And even with that imbalance, though, consumer sentiment was at a 3-month high in April. The University of Michigan's final consumer sentiment index slipping to 65.2 at the end of this month. Now that is down 0.5 point from the flash reading earlier in April, but it is still a significant increase from the 11-year low of 59.4 in March. It's also the first time sentiment has risen since December of 2021. But Americans are still worried about inflation, and they don't see it cooling off anytime soon, despite what economists might be hoping for. Respondents to this survey said they see inflation remaining at 5.4% a year from now and 3% 5 years from now. And as April comes to a close on Wall Street, traders are gearing up for a big week of economic data next week. The Fed meeting is next Tuesday through Wednesday, with the private jobs report coming out on Wednesday and the Labor Department's official jobs report coming out on Friday, plus earnings from big names like Pfizer, Starbucks, Moderna, and more. So don't miss the Wall report at noon every day to get all of the details, and I hope you all have a great weekend.